The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, we're into the breach, dear friends, up 30 points on the S&P cash. Lots of volume, 2.55 billion shares as we start the show in the consolidated New York Stock Exchange tape. 1.2 billion on the NASDAQ. So volume fairly decent in all the markets out here. Even poor old Apple is up 18 cents today. And I don't know what else you can say about it other than that. We look across the markets. More impressively to me was one more time they tried to take the dollar down. It's trading at 96.10 now. And total lack of action in gold. Silver's up, what, about 2%? Very curious actions. I wrote about it in my newsletter this morning. There are a lot of disconcerting things that haven't fallen into place. I think we've got a trend coming out of here. But I think maybe I said it 3 weeks ago. Somebody asked me if I was bearish. I said, kind of short-term bearish, but more medium term or long-term bullish, mostly because we were coming down on light volume. But I also said to that individual that I thought, I'm only bullish for a couple of months. This reminded me so much of 2000. Now, there's no market that's exactly like another market. And why there's no, there literally are more permutations of a snowflake than there are atoms in the galaxy, or galaxies, or the universe. But even the Indians had like 12 names for different kinds of snow. You could characterize it by wet or dry or fluffy or hard-packed. A lot of different ways to think about it. Scientists actually have gotten it down to about 36 different major forms of snow. And if you have ever gone skiing, you will have gone to any of the slopes or the bigger ones, at least the ones I went to. You'll see occasionally them dynamiting mountains, because what happens is you'll get like a real kind of icy snow, and then you get a fluffy snow on top of that, then another kind of snow on top of it. What it means is you have all the conditions ready for a giant collapse of snow down the mountain, and might take out most of the people that are paying you to go up their mountain. So they go out and they go around every once in a while. They have these mortars. They'll fire them off, and they'll land up the hill and blow up a chunk before it becomes dangerous. We really don't have much of that. Hopefully the back and forth action in a stock market will take care of the weakest parts. Unfortunately, we've had a market that for a great deal of time has been manipulated and kind of bubblified by easy money. And I don't know what else you can say other than I probably should be saying saved by zero here now. But it is one of those markets where it does remind me, at least in characteristics, not exactly. I don't think we're near as bubble-licious as we were in 2000 with the dot-com craze. We don't have stocks that literally are worth nothing as the majority of stocks. We have some stocks, a lot of the recent IPOs. They've already pretty much had the fizz taken out of them, like my Diet Coke that's sat on the shelf too long in a 2-liter bottle. They only seem to last about 2 days if they're less than half full. I don't know if anybody else has noticed that. They actually, I'm always wondering whether I'd be better off with aluminum cans. I might be. Anyway, as I diverge and divulge and digress. It really reminds me of that market, and I've said that, I don't know, a month or 6 weeks ago, and that is after the first big tank down that we had in January of 2000. There were a few reasons for it, organic reasons, but those organic reasons basically made the market problematic later, and that's why I gave the kind of twisted analogy of the snow of the what do you call them now? I'm having a mental blank. The ski slopes. I was thinking I can tell you all the names of them, all the places on the summit that I've been skiing and went skiing for years, but ski slope is what I was looking for. That's the magic word of the day. Anyway, you could see those, and what I'm going to say is that this action, much like the action in 2000, left the market vulnerable because we don't have a lot of trading through a big range of prices out here, and that is problematic to me. But what we did see, and what I brought up, whatever it was 4 or 6 weeks ago, was that after the initial break in the market, we pretty much ran up all the way back up into probably March. And that's where the real destruction in that year started to come. And am I going to say it's going to be the same thing? No. But I am going to say we have fairly significant headwinds. What I'm going to be watching for in the coming weeks and months is a distributions back up here. Jesse Livermore, who's my patron saint of a trader, at least one of the two of the traders, him and Richard Wyckoff. Basically, Jesse Livermore said it's not wise to sell at the top. You wait for the test, the second test. And I guess he got enough of them that he just didn't sell. We're traders. We're not going to be waiting that long. We also don't have hundreds of thousands of shares like he did in a market that traded only millions or maybe, 5 million shares a day. So he was the market. We are not. We can't afford to take extensive losses. But I think we could bounce fairly well up here, start seeing some distribution. And what I've always been thinking is that we get into something like October or November, and we start looking at what is going to be next year. We have a president that basically has said he's going to burn the buildings down in December on the issue of the debt. He's not going to sign a recurring debt and spending bill. So we have that to look forward to. Bigger than that, because I think that'll be solved fairly quickly, but I think it will still be an issue, is much higher taxes next year. And I don't think a lot of people, I think a handful of people really started to see them this year. I've talked to a lot of my folks, a lot of people I know. I've got a couple of friends that own their own business, and they're screaming bloody murder. And if you ask about their positions in life and where they came from, you probably say that they would be extremely agreeable to the current path. They're madder than wet hornets about it. But we've just gotten a taste of those higher taxes this year. And if you own your own business, you probably are screaming mad. Next year, you're going to be foaming at the mouth bad. And I think the market's kind of dodged that for the moment, but especially in small business, I think we're going to see a lot of displacement next year based on those higher taxes. Anyway, just a few things to think about, but I think the market could go into late October or November, maybe into Thanksgiving before we see it. We see some of the best short people in the business firing up their hedge funds. And I don't think I would bet against them too many times. In the meantime, let's get this party started.
Everything is awesome.
It is, but really I was talking about history.
Then it's all just a little bit of history repeating.
And we're back. On this day in 2001, Steve Jobs passed away. He was the visionary co-founder of Apple Incorporated. He revolutionized computer music, mobile communications, and devices as the Macintosh, iPhone, iPad. He died at age 56 of complications from panic. I can't even say it. Pancreatic. Why can't I say it today? I think I've had a stroke. Maybe everybody can just give me a break today. Pancreatic cancer, he said. Anyway, Cook tells his employees to remember what he was like. And I will tell you that we've got a couple of movies coming out. One's a documentary, and one, of course, is just a movie made by Mr. Sorkin, or at least written by Sorkin. You can pretty much find those kind of movies that are not action movies. They're all pretty much a lot of conversation. But what I can tell you about it is I started reading a publication called InfoWorld. That was kind of the Bible of computers from about late 70s through the real end of the beginning of the internet, let's say early 2000s. It was the Bible, and there was a column in the back. That column was written by Richard X. Kringley. It was a pseudonym. He never really came out of the shadows until the late 90s, and after he quit writing for InfoWorld. But basically, he had an answering machine, and if you wanted to rat out anybody or tell people about what they did, you could just call his answering machine and leave messages, and he would ferret out, of course, the people that were just making up stories, get enough people to confirm what the people said on his answer machine, and then he'd print it. And he never got in trouble. No one ever sued his magazine or chased him down because, of course, they would have been able to put those folks under cross-examination. And I think a lot of those people knew that the stories that he said were true. But what was fairly consistent was that Steve Jobs pretty much had a problem with being human. This is not uncommon for people in his position that changed the world. If we look at the first person, Edison, probably the first archetype of this, he was more than willing to crush anybody and be a horrible person to get his name on anything, including a patent. Steve Jobs was more than willing to take his employees' work and put his name on the patent. I don't know if that's all the companies I worked for, you may not have got any money, but your name was on the patent. He was more than willing to kind of cook the books on that. But today, this current CEO tells employees to remember what he was really like. Well, he's really much more like the documentary. If you see it, he was very much more like the movie. And like I told this guy over the weekend, Hitler made the trains run on time. You don't forget what he did elsewise. We'll finish a little bit more up in this. Bottom of the hour, we'll get into some charts. Got a lot of stuff to talk about today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Page, Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, just wanted to kind of wrap up Apple in this little segment. But there was a quote that I always loved from George Bernard Shaw. It said, "The reasonable man adapts himself to the world. The unreasonable man persists in trying to adapt the world to himself. Therefore, all progress depends on the unreasonable man." And maybe that's what we're looking for in these folks. I just think once they're gone, we shouldn't canon or cantonize them, whichever one it is. Again, I'm not Catholic. But if you really want to know what he was like, I'd probably, if you could get John Lasseter from Pixar to actually say how horribly or exactly what he did with Pixar, I think you probably have a much better view of the man himself. He was also a little flaky. He thought taking LSD was great. He also thought that he could take some herbal medicine. And, of course, he wasted a year doing that. He had one of the rare forms of pancreatic cancer that could have been cured. I think he's 1 in 1,000 that could have been cured. And, of course, he goofed around with herbal remedies for a year until he died. He died a little after it. He actually went and started getting work done. But some people with that kind of cancer, even under poor conditions, last another 5 or 7 years. Some are actually cured. I mean, talk about being, born under a lucky star. He could have lived through pancreatic cancer, 1 of the 1,000, but goofed around with his flaky ideas from the West Coast of herbal remedies, and probably cursed the biotech sector till the day he died. But in reality, that's it. Of course, a year ago, we also had Apple Pay come out. Everybody told me I was smoking dope. When I didn't think Apple would take over the world with Apple Pay, today just 1% of all transactions in the world have anything to do, and 1% in the United States too. Pretty much 1% everywhere that Apple is around of transactions have anything to do with Apple Pay. Oh, we got music playing again. Why is that? I shouldn't have music playing now.
The path of
Okay. For some reason, someone went to a break on me, unjustified. So hopefully we still have 3 minutes left here. Anyway, just some thoughts on that. But I was seeing a lot of propaganda this weekend from Apple on the movie, from CNN, who literally changed the color of somebody who did something wrong, a criminal. And they decided to change where he came from and his skin color to justify some of the stuff. But Apple was always one of those companies that whatever you saw probably wasn't real. They spent a lot of time on massaging every message, making sure that they had a lot of people to negate anybody that would say no or nay. But always an interesting place. Anyway, other things going on. Oh, that was my little thing out here. Jim Chanos over the weekend talked about Solar City. This looks to be another battle between, of course, Mr. Musk and Jim Chanos. If you didn't know Solar City, it is run by, is it the brother-in-law of Musk? I'm not exactly sure how this guy got in other than pure nepotism. It wasn't like the guy was doing a whole lot before then. Anyway, Mr. Chanos over the weekend says 55 cents sounds nice until you realize Chinese manufacturers will be at 30 cents a watt hour by 2017, said Jim Chanos. A report by Green Tech Media, of course, forecasts the cost of a watt will fall to 36 cents by 2017. Chanos says the short is based on the idea that Solar City is really a subprime financing company, and as for the price of the new solar panel, Solar City's REO Rive says that it was essential to making sure our cost structure can survive the loss of the investment tax credit. And I will go back and tell you again that I informed you thusly.
I informed you thusly.
I did it right this time. About all these companies being extremely weak after the end of the year because, of course, that ITC investment tax credit was going away. The way of the dodo. No longer around anywhere else. Anyway, I think Jim Chanos, I wouldn't bet against him, let me put it that way. Very weird to see this kind of nepotism in a big company like this, but maybe if I dug more, maybe the guy is qualified to run it. But I don't know. I think 2 of the 3 companies in 5 years will be gone from Mr. Musk, and he probably won't be the king that he is today. But still an interesting guy. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Anyway, we were talking about Solar City. I don't know if there's a whole lot more to say on this. Short term, you can see a lot of fluctuations in this. We've seen Mr. Musk go to the Twitter to try to pump his stock up and run around and do other things. And this is not a story that will be over in a day or a week. But my guess is Mr. Chinos does not play for pennies. And my guess is he thinks this is bankrupt in 3 years. We'll see how fast this works out. Of course, we had pot, and we're not talking about marijuana. We're talking about Mr. Potash up there. And it was up a little bit this morning. I didn't look at it lately. Do I actually have it on my list here? Maybe I do. Of course, they were trying to buy out a company in Europe for almost $8 billion. Why does that say $8.8 billion from the firm and the German fertilizer and salt supplier? But market conditions kind of kicked that out of the way. The stock of that company was off like 25% this morning. It didn't seem to make a huge difference in potash itself. It's up 1.6%, up 33 cents. But thought that was interesting. Maybe we'll see some kind of lows in potassium, or not potassium, in potash here soon. Of course, Twitter, we talked about that. And kind of interesting to see the reaction to the market now. I think a little bit too little too late for Twitter. But Jack Dorsey is its CEO. But I had a few emails about this, and some people asked me about what I thought about Twitter. And I think Twitter may be a lot more like eBay. They bought that company, Periscope, and why Twitter may have be kind of wandering off into the sunset. The whole Periscope thing looks to me like it could be as important as PayPal. So some of these companies that went public, buying other companies like Twitter bought Periscope. If you're unfamiliar with Periscope, it is a company that makes an app that lets you take your video camera and send it to multiple people in real time. The idea is that maybe they're next to a dirigible going down and somebody's screaming, "Oh, the humanity! Oh, the humanity!" And of course, you get to watch it live. And there's been some fires at houses and some minor issues yet. But much like Twitter, which is kind of like when something big happens, everybody goes to Twitter. Kind of like when something big happens, everybody goes to CNN to see, the latest plane crash disaster. I got a sneeze here, by the way. Phew. Well, that was 5 in a row there. Anyway, but Twitter may be more than that. So I'm going to be watching that. Twitter also might figure out an actual way to make money. Apparently, this is all an afterthought, just like Facebook was. Facebook did find a way to make money. Well, maybe we'll talk about more of those after this. It is a mad, 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 mad market. Wanted to show some of the things that people should be looking at today. I'll get to the ones in the den and in the email here. That will be interesting. First thing is Rand Gold, GOLD for the symbol out here. And if you are bullish on gold, one of the reasons I didn't like taking a lot of these gold stocks off the bottom was that I thought that there was going to be some fairly decent resistance levels. Now, in confluence, that is the 382 of 1 bigger movement against the 618 of another movement. And if these things get very close, let's say in a $60 stock, about $1 away, then you get a very narrow range that fairly accurately describes and shows resistance levels in the market. If you had been long gold, I think one of the things you would have wanted to do was take your money as soon as it hit this confluence area. The top of that was $64.06. We got to $64.21 and have reversed. We may still go higher in gold. I'm still agnostic in it. I don't see a lot in it either up or down. But what I do see is a fairly decent pattern out here that suggests that if you were trading and not investing, that move off the September 14th low would probably have gotten your maximum amount of money as you hit this confluence level today. Went above it and closed back in it or below it. You want to watch that closely. Now, you had some decent volume on Friday. Again, I'm not horribly bearish or bullish on gold, either one. This thing could still be around this low level, 2-4 weeks from now. I just don't see a lot with the dollar index. Every time someone tries to blow it down, it seems to creep right back around to this 96 level. The current contract, 96.15. It's up 32 cents, by the way, on the dollar index. So it's not beyond the scope of reason that this is now in a lower trading range. May not go back down to 54.88. You did kind of tie the low of the previous low at 1.2 million shares, though, but it is a good time to start watching on these confluence levels when these stocks are headed back up as they are today. And what do we have out here for mail?
I got mail. Yay! I got mail. Yay!
Anyway, I guess this is just NE. What do we have out here? Noble Corporation. We were talking about this one last week. One of the things I dislike is the higher volume eventually. This thing did come back down on a lighter volume, but got heavier volume. But nice pop out of it nonetheless. And that's from Brent and Martinez. But and a little bit little bit messy out here. Not a whole lot to see. And what did we have here in the thought there was somebody in here asking for something. Big buzz on Periscope. People love it. Great segue. Did you do the confluence of AM? If not, would you do so? Yes, I would. I live to serve, folks. I live to serve. We'll take a quick look at AM too. And I don't know if this actually has one. I knew that the Rangold did, but I don't think this one actually has one. No, it is just testing on Anglo Eagle Mines, testing its previous high. The August 20th high, $27.91, and got tested out here today with 3.5 million shares so far. But went above the previous high. It's tucked back down, and you do not have a test of $21 from the August 6th low. You did get into that candle, and the volume got 4.8 million shares. So right now, this kind of says that maybe AEM is just in a bigger trading pattern. It had nice volume on Friday. There was no problem with that. Did not break the high with that volume, though. But again, I'm not saying that they have a burning bullish or bearish view of these. Let's see, what else do we have out here? I think somebody along the line up here would say FANG. So that's Facebook. And what do we see in Facebook? Nice bounce out here. Let's take a little closer look at it. Man, this kind of got like a trend line that you wouldn't want. This thing's kind of curving back over out here. Not 19 million shares. You'd look for the September 21st high, $96.49 on Facebook. Not a lot of volume into this one. In fact, you had kind of a strong day down with 29 million shares on the 25th of September, and you're into that 19 million shares. Maybe you get 25 million shares today, 28 million shares. It's hard for me to say that this one's going to blow apart. The earnings have been fairly good. What I truly dislike about this one right at the moment is the energy up off this September 29th low. And you made the low, you come up. But if you can see my power law vector indicator numbers, you've got about a 7.8 going against 11 down. And that would tell me that more than likely this is in some kind of trading range. It doesn't have a lot of energy on the way up, and we see the lack of energy in it today as a big indicator. What do you think of dries in that sector? Had a few people ask me about this, and we talked about it last week, and that was you really have to get into these stocks that are dry bulk shippers and figure out what these guys do. Maybe it's in their profile. I have to go back and look each time. I can't remember every time out here, but it should be in their profile. Dry bulk, petroleum cargoes, and offshore deep water drilling services. That one stinks. The petroleum cargoes might be okay. Company operates through dry bulk tanker or drilling segments. So dry bulk tanker, it's two of the three on this one are horrible. And that is dry bulks. You're not shipping iron ore. You're not shipping a lot of wheat. And you're not shipping anything other than crude, which is one out of the three legs. I would probably say I'd look for something that was and did work in crude maybe alone, because I think they'll still have some big movement. And occasionally, I think we talked about this before. Let me see if I can get another one up here in a new tab. There we go. Stocks, charts, calendars. Where's my chart? I think it's sector scans. News, volatility. Somewhere I had this in there. Oh, there it is. Baltic Dry Index from Bloomberg. Let me move to a new window. Yeah, there we go. Took me a second, but I'll figure it out. we're looking at the, I should think I can take a look at this. Let's look at 1 year out here on it. It's been kind of coming down since a few weeks ago, which is no good shakes, of course, for anybody else. Let me zoom this in a little bit more. Anyway, this is the bulk dry index. You can find it at Bloomberg. DBIY:IND is the symbol on Bloomberg Business. I don't have it as an individual one on my systems for some reason, probably because we don't pay for it, which is fine by me. I'll go to Bloomberg's website and look at it. Anyway, this is, it had a little bounce on the market. It's kind of been headed back down. I can't say that this is overwhelming. You had kind of a nice move off the 600s. It really never did a whole lot for, of course, most of the dry bulk shippers. It wasn't enough. We saw some of the shippers over the last couple of weeks basically cannibalize and sell their ships as scrap to get cash to continue going. That would make me nervous of all those in the dry bulk shippers. And of course, like I said, we had that bounce, and now we're not really getting a whole lot of anything in dry ships out here. Let me see if I can see their financials real quick. Time key statistics. I think that's what I'm looking for out here. Its market cap is $142 million. If you have $142 million, I think you own the company. Enterprise value, it says $1.2 billion. I don't know about that. Forward PE, fiscal year ends this year. Profit margin minus 80% or 70%. That's not good. Revenue $2.1 billion. Total cash $11.5 million. Again, these aren't all up to date, but I saw several companies over the last couple of weeks literally cannibalize their fleet to get cash to keep running. And if all these folks have is $11.5 million, they're in trouble. Probably a good reason for them to be at 20 cents. They couldn't probably weather the most minor of storms. But at the same time, if you don't spend a lot of money on a 20-cent bet, then you can look at these as paying 10 or 20 to 1. And if you can get, 1 out of 4 correct, these can be some fairly decent bets. I normally look at buying a stock that's 20 cents as a option that never expires unless they go bankrupt. But remember, these guys only have $11 million. I imagine them just having a storm and not going into port would cost them $1 million. They can't stand a great deal out there. And again, they may have sold some ships. They may have some more cash that I don't know about. But I mean, you really need to go in and dig through every one of the financial regulatory things when they're down here at 20 cents and see if you've got a good bet. I'll probably do that this week. I'll start looking at some of them. But again, that's a lot of work, and that's the stuff that goes into my newsletter. We'll be back in just a minute. You can give me an email at path@tfnn.com. You can also post a message in the den and also call me at 877-927-6648. Tell me I'm all wet. Tell me I'm great. Tell me something.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And in my newsletter this morning, I talked about what I would have been looking for in the market as far as a stock that would bounce. And we talked a little bit about it last week, so I kind of wanted to wrap up the show with it today. I put a lengthy explanation in the newsletter this morning. But what I like to do is exactly this pattern that we saw in Zion's that developed on Friday. And one of the things is this is extremely rare right now, which makes me think that at best we're in the trading range, and at worst we're probably setting up a real bear market, not just the market gas we've seen of the last 4 weeks, which would take me back to the opening of the show, where we were talking about how this kind of reminds me as a light version of 2000 in that market, in that we saw the markets fall apart right after the first of the year. They rallied into March, and that's where we saw the real destruction the rest of the year in the market. So we had a good almost 3 months between the first warning signs and danger signs, the weather report saying a hurricane was due. Anyway, what I want to see is a coherent market, and I was talking about that. The problem is there just aren't a lot of these stocks. Most of them ended up having light volume at the low, so you get a bounce. But you really have to watch these bounces, and the reason why is, if you can see this, probably, let me zoom in just a little clearer. This is what I want to see. I want to see the volume test of the low, which we saw on August 24th. I want to see the strength off that low kind of expand, in which case this did even more volume than when it came down on. It was about the same, though. So you bounce, you get to the high of September 17th, and then as you come back down, the energy really drops off on this, and this is what this did. On my power law vector indicator number, that's a 1.8. So basically, energy is off about 30% on the retest. When we go down there and pierce the low of August 24th, which was $26.42. We do it by a good 20 cents on Friday. We do it on 3.3 million shares. And, of course, then we bounce out of there. Now, to me, this is what I call being congruent or coherent. But I want this pattern for me to go long. And I think this is one of a handful of stocks that I've found that literally did the pattern correct. That is, energy off this top declined significantly, and the volume was tested on lighter volume. What we really saw in the majority of the market is that the energy from the highs around that mid part of September, if any of these bounced back into the lows of the last couple of days, actually ended up having more volume. Now, we're going to get an automatic rally on all of these, but the automatic rally is generally fairly short-lived when the energy on this last leg comes down. Now, I think we came off a low where we had massive short interest, and we're probably going to get one more day of us floating up at these higher levels. We're at 1985 or so. I could see us up at 2,000 tomorrow, ring the bell, wash out every short, and that would be it. In the meantime, I had a request because we had a lot of bears that have been running, so I got to get this in before we leave the day.
Running bears.
Yes, you're bears.
Through the bushes.
They're running.
Dodging bullets.
They're dodging bullets.
Tree.
They're running bears.
Running bears.
1985 on the S&P cash.
Running bears. What they call me.
That's what they call them, running bears. Anyway, you all have a great day, safe day. We'll see you tomorrow. Same bat channel, same bat time. And watch out for those running bears. They'll run over you everywhere.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.